Hi everyone, I'm Atul Monga here and I'm founder and CEO of Basic Home Loan.
Okay. So, before we talk about your journey, can you give like an elevator pitch of what is basic home loan?
Okay. Uh, at Basic Home Loan, we are trying to digitize mortgages in India. So if you see, mortgage is one of the three key necessity of any, or as in home is the three key necessity of any human being, roti, kapda, or makan. But in India, if you see, we have the highest homeless population in the world. People living in slums, people living in, not you can say practical houses. They are living, and the problem in India is not that we don't have land or we don't have money to give to these people. The problem is the lenders want good people to whom they can lend, and the customer need money. So there is no bridge over here. Obviously, there are traditional channels like bank branches or agents in between, but there is no tech play here. In India, mortgages are just 10% penetrated, which is very low as compared to international standards. So to bridge that gap, we started Basic, and we started as a broker initially. And what we did is that we go to customers, we help them qualify for the right bank. Then we have done integrations with the bank where we do paperless applications, and we help them in tracking their applications, and we help the customer till the final disbursement of their loan. We follow a digital approach because few things cannot be 100% digitized in India, like mortgage evaluation. We don't have a mortgage database in India or a property database in India. So that's supposed to be done offline. So that is done through our agent network. So in a way, for our customers, is a completely digital experience. Sitting at home, they are getting their home loans done, and we are trying to digitize the various work streams which are associated with the mortgage application in India.
So, what are some numbers about the business? What is your
Mm.
disbursement rate, like monthly disbursement or
Okay,
total amount disbursed, and what just share some numbers about basic.
okay. We started 3 years back, and now we are at a monthly run rate of close to 1,000 crores of disbursements per month. Every month, we get about 5,000 crores of home loan applications, and we are able to disburse 1,000 crores out of it. Yeah, in terms of our presence, we are now present in 30 cities. This will be our first, our third full year, and we'll be crossing 100 crores in revenue. And we have been always cautious about our profitability. We were always profitable on unit economics. In last months, we have become profitable on EBITDA level, and we have been growing every year. This year, by March, we'll be doing 2,000 crores of home loans every month. So at that time, we'll be the largest distributor of mortgages in India.
And
So,
this year, you also raised a Series A of about
no, we
9
raised
million.
Series Series B. Till date, we have raised three rounds of funding. One was during our initiation stage. We got some money on our paper idea. Vicus Capital. We raised 500K USD at that time. And then in October 21, we raised our Series A. At that time, we raised close to 25 crores, which is about 3.5 mil. And now, recently, we have raised close to 40 crores. The mix of primary and secondary.
Okay, okay, amazing. Um, what made you the right founder to start this business? There is this concept of founder market fit. Just tell me about yourself and why you are the right founder to do this.
See, I believe, in mortgages, unlike any other loan, you need some kind of expertise. It's not a volume, as in a number of customers volume game. It's more of a, a depth game, that how much you know about a particular case. Obviously, it's a wholesale lending. Even though we focus on affordable housing loans, our average ticket sizes are close to 30 lakh rupees or 25 lakh rupees. So, still, on which is a big number as compared to any personal loan or a business loan request. So even if you see big banks, their mortgage customers will not be like in millions or tens of millions. It will be limited, but it's a wholesale lending, so you need that depth. Now I've been working in this space, in mortgages space, since 2015. I've worked as an across lending products, and I have in my previous experiences, I have worked with companies who were like nascent startups to people who have gone IPOs. So I had seen the industry very closely from the NZ angle, from the banking angle. So in 5 years, I accumulated some experience in this industry, and then when I got this opportunity to build something of my own, means I cannot say I am apt founder for this, but I believe that I can do it. So that's why I started it. And till date, it is working well for us.
You said you worked in companies which are in the lending space. What was
Yeah.
your role functionally? Like, were you in sales? Were you in underwriting? What, like,
So I was primarily in sales and business development. And maybe I can tell more about my career, how it gone. My career is slightly, gone. I changed back many times. So I graduated in 2009 from IT Delhi. So I started my career with Credit Choice as an investment banker. I advise a lot of banks and insurance companies for their M&As, IPOs, debt raise. For some briefly, I worked in India. Also, I worked on that Kotak and ING deal. And my last assignment was in Singapore and Hong Kong, and I was working with a lot of financial institutions in 2011, I got a tip from someone that what's happening in China right now. So I was helping a lot of Chinese companies for IPOs. So someone told me what's happening in China right now will happen in India in next 10 years. You should go to India, work in the startup ecosystem. And it was a good tip because in 2021 exactly, we got our first IPO in India for startups. So in 2015, I came back to India, started working in Indian fintech space. I worked with a company called Rubik. At that time, it was they just started. So I helped them raise their $3 million from Canary Capital, and then joined them as a business development head. Then eventually moved to
what was
sales.
the product, Ruby?
So they were doing all kinds of loans. They were a
Okay.
marketplace for all the banks and all the products. So there I that was a good experience because I learned across products. I learned for credit cards, personal loans, business loans, commercial vehicle loans. They were doing everything. And
They were like
then
a bank bazaar.
Yeah, but they were more focused on fulfillment. So they had an agent network where so lead generation was not
Okay.
online, rather offline through agents. So there I got to work with agents, work with banks, and I saw the whole fulfillment process. It was not just a company passing on leads, they were doing the fulfillment. So there I was able to see that thing happening across the product groups. Then
And
in
the difference in these two approaches, company passing on leads would be like say a bank bazaar, and
yeah,
doing fulfillment would be where they have somebody who goes picks up papers, who gets the
yeah,
customer signed on the
yes,
agreement, who
yes.
submits all of those papers to the bank,
It's
follows
more like
up
a DSA business that
at
there is a
DSA.
direct
Okay.
selling agents, and they were aggregating the DSAs so that they can digitize this DSA industry. Now, both of them have different approach. With a DSA, you can even work on big ticket loans. You can even advise on complex transactions rather than just keeping it to credit cards or personal loans. So they have a different approach. Then I joined Policy Bazaar. So I was, working in Paisa Bazaar as part of Policy Bazaar group. And in Paisa Bazaar, I was managing again. They were doing something in the offline space through these agents only. So I was leading it as a business head. And in 2020, when COVID happened, so I was looking for an idea for something I can do of my own. And on my television screens, it was apparent that there is a problem. People are moving out from cities to their houses. So housing is a problem. I'm working in the same domain. So that's how the basic idea came into being. And I was lucky enough that I got a call from Ficus Capital for a job in Germany for their portfolio companies. And I didn't want to move out of India. I have seen some good success stories in my family only. My cousin, my brother, they have sold their companies. They have built good businesses. So I wanted to stay in India. So I just pitched them this idea and was lucky they helped me with a 500K investment. And that's how it all started. I'll say I was lucky enough that everything was falling in place. And I should not be saying this that I'm venting on someone's misery. But in COVID, a lot of people were getting unemployed. So I was able to get initial team members who were very good people. They were just let go because of COVID. So was able to make a good team in the beginning and got some funding also. Idea was there in my experience domain. So that's why we were able to scale very fast with all these factors incorporated.
Amazing, amazing. Ficus Capital does like early stage investing.
Yes. So Picus is a European fund and they do investing at multiple stages. One such program they run is where they write ideas on paper. They write checks on paper ideas.
Like
So
Sequoia
we were
Search
work.
kind of a.
Yeah, you can say that. They don't call it as a separate kind of program, but it's under
Mm,
Picus Capital only. And
mm.
at that time, Picus wanted to establish their footprint in India. So they were meeting people. And that's how they got me. They connected me through LinkedIn, by the way. It's not like
Amazing.
that someone introduced.
Okay, amazing, amazing, amazing. So luck played a large role in
Yeah, I'm
being
very,
the
very grateful for that.
okay, okay. Oh, what do you need to uh, start? So essentially, what you started was a digital DSA for home loans, right? That would have been
No,
version
so
one.
we wanted to do in a different way. See, the aggregation to some extent, I believe it's very difficult to make it profitable because margins are very wafer thin kind here. So
But
from day one,
aggregation means that you work with multiple DSAs as a layer between them and the bank.
yeah,
Okay,
it's
okay.
it's of no use to bank. Why? Because a
Uh,
DSA is supposed to get say X amount, you are paying him more because there is a layer in between. So
uh,
so our model is different here. We don't just ask agents to bring us customers. We generate our own customers and we give them for fulfillment. So basically, we have a funnel where we acquire customers. So we have actually multiple funnels, multiple types of sourcing. One is through influencers. So when we started with the influencer channel. That yeah, no one goes in market to buy a home loan. People go in market to buy a house. Now, if you're going to a CA for a free advice, that sir, where should I go for a home loan? Now, that CA will give you a free advice. If I tell that CA that, refer that customer to me and I'll give an expert to that customer and I'll pay you something. So basically, I monetize that referral for it. So similarly, there are property dealers, there are many other profiles. Now, in Gurgaon, we even have, many housewives in societies who are not referring us customers because, at least in Gurgaon, if you go to any society, there is at least one auntie ji, who is entrepreneurial. She will be doing some MLM or those kind of things. So we make them as our influencers that if something is going on in your society, monetize it. Then second is our direct online channel where we acquire customers for digital marketing, Google and other stuff. And third, we go directly to builders. So we saw that, if you see any DSA in the market who is working on home loan, they don't want to work on small ticket loans because their unit economics don't work around there. And in a affordable housing loan, and that to a construction linked plan, the first tranche would be very small. It would be 3 lakhs, 4 lakh rupees. And then after every 6 months, 5, 6 lakh rupees of disbursement is happening. So the money is not that big. So they generally don't do these kind of cases. But since we were working through technology, so our unit economics can take that kind of cases. So now we go to builders, we tie up with them, we help them in getting their projects pre-approved from the banks, we integrate into their CRMs. So now whenever they are selling any new inventory or they're launching a new project, we get exclusivity in that we get wholesale customers, as in we get 1,500, 2,000 customers who have booked the apartment and we help them in getting loans from the bank. So this is a third channel. And then we have alliances with various other market players who are into real estate or allied services. So we get customers from them, and then we assign it to the TSS who are there in the market. That these TSS now they use my mobile app to qualify them for the right product, then do a paperless application. We have integrations with the bank, so we can provide step by step tracking. So all those things are built around technology in our system, and so technically, I'm not asking agents to give me leads. I'm asking them to fulfill my leads. And since we are providing leads, so we have control over the payouts we pay to them, and that's how we become profitable.
okay, amazing. Yeah, I want to zoom into some of the things which you were speaking about. First of all, how does a DSA earn in case of a loan? Like you get a percentage of the amount disbursed, or what? Or is it a fixed fees? Or
So, our fees are generally of various kinds. One is obviously linked to the disbursement amount. Once you do any disbursement, bank pay you a fixed amount. Then bank pay you for cross-selling few products also, like if we cross-sell home loan insurance or life insurance, or if we help the customer in setting up a bank account with the same bank pay you for that money. And finally, then there are volume link incentives that if you do more volume, bank pay you more. For the bank, we are reducing their OPEX. Whatever they are supposed to do in their branches through their personnel, my agents are doing that. So more and more volume we do, more and more they pass on to us. So these are three types of payouts we get from the bank, and pass on a part of that payouts to the agents.
okay, you signed up with the banks, and what was the nature of your relationship with the bank? You were a DSA for the bank.
Yeah. So see, unfortunately, with banks, there are only two type of relationships currently in market, and by the way, we are exploring third also. First one is a pure lead seller like web aggregators or become a DSA. Now, idea is that when we started, we were no one and we could not challenge the bank to create something new. So that's why we have to agree on the DSA. But now we raise a pre-series B round to enter into our own lending in affordable housing loans. So now we are entering new kind of relationships, which is based on FLTG. So with few banks, we've already got okay, and very soon you will see our own product in the market. We're up to 30 lakhs of home loans and loan against property we'll be doing through a FLTC arrangement. So there we are not a DSA, we are actually a LSP to
Co-lender,
the lender, not a co-lender,
LSP.
lending service
Okay.
provider. So
Okay.
in co-lending, I have to put my book also. That also will do in future. But as of now, we're starting with FLTC, and
Mm.
there we are introducing a new product. And the reason behind that is simple. I told you we get 5,000 crores of application, and we are disbursing 1,000 crores only today. Now the remaining 4,000 crores, not all are bad customers. There are few customers for whom some products even don't exist in market. The profiles are some specific profiles. Real estate business is actually a very, geo-based kind of business. Like if I give you an example, uh, DLF is the biggest in the north or in Gurgaon. They're not even present in Mumbai. If you go to Mumbai, Hiranandani or Rustomji are the biggest. In Bangalore, Brigade or Embassy, they're not even present in any other city. So, it's a very geo-based business. Every geography has their own needs. So every, you know, mortgage profile or a property profile has a different kind of treatment, which don't exist for all the customers. So I believe we have found some, blind spots, you can say, or areas where we get a lot of customers, but for whom the product don't exist. So we'll underwrite them according to a new policy which we have created with the banks.
Uh, I want to understand what is an LSP. So there, so three relationships with a bank now, which you've told me. One is you are a lead seller. Customer inquires on an online portal, and the lead is passed to the bank. The second is you are a DSA, which means you help the customer process the loan, etc. And then an LSP, a loan service provider. What is an LSP? Like Paytm would be an LSP. What they are
Yeah.
doing with
So
their, yeah, just give
yes.
me a 101 on FLDG also. I believe there are some recent regulations about
Yeah.
FLDG which have come in place. This has been a fairly controversial topic. Just help my
Now,
listeners
now the
understand.
RBI is okay. So in FLTC, what happens is that I go to a bank and I tell them that okay, I want to lend on this policy. Now the bank analyze that policy and will tell me that okay, the risk they believe is up to say 1%, 2%, 10% of NPA. So they will ask me to deposit a particular sum. Suppose I want a 100 crore book and they believe that the risk is say 5%. The bank will say okay, you give me 10% of the money you are asking, which is about 10 crores in a FD, and I have the first lien on it. So if you lend, now you get the customer, and if you tell me to lend to that customer, we'll do that. But if any NPA comes, we'll deduct it from that deposit which we have. So for a bank, it becomes a completely secured kind of loan because they already have the FD and they don't have to put any OPEX. So the lending service provider like us will be doing all kind of sourcing, all the ops, all the collections, and it's a fairly secured loan for the bank. So this is how FLTC works. And recently, RBI is actually, there was a lot of confusion earlier, but now RBI has cleared the stand. RBI has made it clear that for any FLTG, the risk of the lending service provided cannot be more than 5%. So now for every 100 crores, you have to pay 5 crores of deposit to the bank. So there it is, for a bank, it is a very low number because they want to have maximum risk covered through the LSP's deposit. So now it is actually good for companies like us who have or which has some vintage because now uh, a new entrant will have to first prove themselves that whether they can do the FLTC or not, and then only bank will engage into discussions. But since we have been working from past 3 years and we have in total, we have disbursed close to 7,000 crores of loans. We have locked in 17,000 crores of loans. So now banks know us. Bank have seen us working. And in our brokerage also, our portfolio has been fairly clean. We never got any red flag from the bank for NPAs or anything. So we have created that vintage. So it's easy for us to get that FLTG. So
And what has been the NPA rate on the 7,000 crores that you have dispersed so far?
see, generally, as a broker, I am not responsible for the NPAs, but we keep on discussing with the banks. As of now, no bank has come back to us with any kind of red flag. So this means that even if there is an NPA, it's under their threshold limits. So that otherwise they would have told us that if the
Mm.
portfolio is getting bad, and they might have blocked that ports with them. So it's not. It has not happened. So this means we're doing it right.
Okay, got it, got it. And the what is the financial benefit of being an LSP rather than a DSA? If you are an
So in a
LSP with a
DSA,
bank, yeah, do you earn more?
for
Like,
yeah, definitely, because in a DSA, you are paid only once by the bank at the time of disbursement, and then bank care take
so,
care of the
you said
customer.
that disbursement happens in tranches, so you don't get paid for each tranche.
you are paid for the each tranche, but that is only in construction link like. So overall
Okay.
sanction says for a 50 lakh rupee loan, and then suppose 10, 10, 10, 10, 10, 5 tranches has happened. So overall you're earning one time on that 50 lakh.
Okay.
But but or if it is a recent say case of say 20 lakh rupees, then you are paid only once by the banks. But in terms of in a FLTK arrangement, you can put your own margin. So the bank will say that okay, you have secured the loan book for me, but my minimum rate of interest which I at which I lend is say 10%. So now if I go out in market and I lend to customer at 12%, so whenever the EMI is collected, 10% will go to the bank, 2% will come to me. So there is a recurring revenue stream. So you get better margin. So you become a lender without having a book.
Amazing. Okay. 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 And I believe Paytm is also using this approach, right, to build their.
Yes, yes, they are
Yes.
doing it in personal loans and many other
Mm,
products.
mm. Okay. Okay. Interesting. What is the average spread here in FLDG? Like you said, 10
So
and
we are
12 as
currently
a
working on that those ones just
hypothetical.
random
I
numbers.
understand. Yeah. Yeah.
So
But
we are
like,
actually working with the banks. We are finalizing these numbers.
mm,
Obviously, would like to be competitive as compared to other HFCs in the market. So we are competing with HFCs who are lending at a rate of
HFC,
18,
a
19.
housing finance
Housing
company.
finance company. Yeah.
Mm,
So in home loans, it is not NBFC, it is HFC. So
mm,
it's a different license. So
mm,
so basically, there are institutions in India who are lending at 18, 19, 20, 22% for mortgages.
mm.
We want to compete with them. We believe their operations are inefficient because they lack technology. If you see their cost to income ratios, it can be up to 70, 80, 90%. So, believe through technology, these cost to income ratios can be brought down and customer can be given the same loan which they're getting at 18% to at least 13, 14%, or maybe at 12% if we can reduce that OPEX for the bank. So, we are working with the banks that how much they will provide to us in terms of NIM, we want to keep our NIM close to 2 to 3%, or
NIM is
maybe
net
net
interest
interest
margin.
margin. Yeah,
Yeah.
about 3%, 4% of our NIM, so that we are earning the same amount which other HFCs are earning. But overall, we'll be lending at a lower rate.
Amazing. Okay. That sounds fairly disruptive. Um, i- i- why is the cost more for traditional housing finance companies? Because they need people to go and collect documents and all that. Because you also need people to collect documents. So
Yeah,
what is
so
the difference
that's
in
that.
cost structures?
Okay. See, how a typical HFC works is that their operations are through branches. So whenever they want to expand to a geography, they will open 2, 3 branches. They will hire a credit team. They will hire a sales team. They will hire a ops team, a RSU team. Now, even if a customer comes or not, they have to bear those costs. And in the second thing which happens is that they don't want to open branches in those areas where they don't have enough customers. So in tier 3 cities, or maybe in those remote locations where you don't have too much density of mortgages or too much penetration of mortgages, HFC will not prefer to go there because they will not be able to cover their fixed costs, which is human cost, admin cost, branch cost, those things. Now our model is different. Whatever a branch is supposed to do, till date, what we have done, we have actually created a distribution using technology and agents, so that the whole thing can be done, which a branch do through our mobile app and our agent. And these agents are paid only on disbursement. So I don't have anything fixed over there. It is all variable. And technology obviously is variable and in fact lower than personal cost. So we believe that's the differentiation we have created. Now, even if I have to start a branch in a remote place in say Nagaland, Assam or somewhere where no fintech, I think they have not reached too much over there. I just need a human being over there, an agent. He can download my app, he or she can download my app, and they can advise the customers. So I don't need a branch. So we can penetrate easily into tier 2, tier 3 cities. We can be more profitable because we don't have any fixed costs. So that's the difference between us and the traditional housing finance companies. In fact, if
Okay.
you see, yeah, uh, 70 or 80% of total home loan disbursements are done in top five, states. And if I go by city by data, it will not be more than 10 cities. And about 50% of this comes from Delhi and Mumbai only. So that's the skewness in the distribution of mortgages because people don't have branches in their locations.
You had mentioned right at the beginning that our mortgage penetration rate is 10%, which is much lower. What's the benchmark? What would like a more,
GDP. So
yeah, 10%
10%
of
of the
GDP?
GDP it is.
Yeah, yeah, yeah.
And if you see developed economies like US or UK, it's around 65%.
Wow.
See, whenever a mortgage is not just a loan, it actually is very beneficial for the economy, because when a land is mortgaged, that piece of land comes into the formal economy. It has got a price. Government has got to know about it. People, and there is a whole society being built around it. So there is social promotion over there. Then the communities are built. There will be more people living over there. There will be more businesses over there. So mortgage actually promotes economy. So
Mm.
mortgage penetration should be higher. In fact, if you see other Asian countries, in China, I guess it is around 30%. In Southeast Asian countries, it is again around 25, 30, 40%. In Hong Kong, it is close to 50% or 40%. But in India, it's very low. It's just 10%.
Right. And I believe a lot of the Asian economies also experienced high growth purely because of the real estate and the lending boom, like China especially. Although now I think it's coming back to bite them, but it did contribute to their growth.
They now have the concept of ghost cities.
Yeah, 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 yeah. Mm. Okay,
See, in
okay.
India, that stage will come fairly late. The reason is people don't have houses here.
Mm.
Means there is so much land available. We are like the seventh largest country in the world. And if you see, we have 110, or in fact more housing finance companies in India. You name any business conglomerate, they will have housing finance business. Why? Because it's a profitable business, secured loan. Uh, in fact, if you see Mr. Adar Poonawala, the first business he started or acquired after that Serum Institute or after the COVID was Magma House of Finance. It's such a profitable business. Everyone is there. So there is a people are sitting with money. They want to lend, and the customers need that money, but that gap is there, which we believe we are trying to build a bridge in that.
Mm. Right. Yeah, because it's asset backed and uh,
Yeah.
typically you don't see too much price swings in real estate. Mm.
And
Okay.
again, what happens is that these affordable housing loans are more secured. Why? Because for a person who is not that rich or a poor man, home is the only asset he creates in his whole life. Then he give it to his children, and eventually they fight over it. That's a separate thing, but that's the only investment they build in their life, and they might do a default in a personal loan because that default impact that person only. But here, his whole family will come on road, so I eat afterwards. First, we pay the home loan EMI. So in affordable housing, and it's actually easy to repossess a property from a poor guy rather than for a person like Vijay Mallya.
Yeah, so true, so true. Yeah, 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 yeah. That's the irony. Yeah. Okay. So the reason for the low penetration in India, one is you're saying that low ticket uh, loans are not preferred, so there is uh, not enough businesses who are going after low ticket loans. Then you also
No,
said,
no, 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 no. That's not exactly what I said. See, actually, low ticket affordable housing loans are part of priority sector lending in India, and every bank needs to maintain 40% of their books in that. But they are not, profitable business because your unit economics is not good if you have a fixed cost model. So, see, you earn as a percentage of loan amount. The more the ticket size, the better you will earn. Now, for a bank, they are not able to meet their priority sector lending targets. So at the end of the year, they pay premiums to buy books from other HFCs, and that's the reason there are so many affordable housing finance companies. Now, problem is not that the ticket size is small. The problem is that the penetration of branches in India is less. So people actually don't want to build branches in those locations where mortgage penetration is low, because they will even for the initial period of the business they will have to incur losses, which a bank don't want to do. And second reason is that traditionally in India, people have been, afraid of mortgages. If you see, no one, it's actually considered bad in India to go and mortgage your house or mortgage the gold in your house. Means people will take a personal loan at 14, 15%. They will not take a loan against property at 9, 10% because it's considered as a taboo. But now, with more, I'd say education of people, people are coming and they are buying mortgages. It is actually increasing. It's growing at a CAGR of around 15-20%. And as per Mr. Deepak Parekh, there was a news article last August in 22 that in India, in next 5 to 6 years, there will be around $300 billion of new mortgages to be done. So it's such a big opportunity.
Uh, the phrase mortgage and home loan are exactly the same. There's no difference between them.
Like home loan is a type of mortgage that in a home loan, you are mortgaging a house which you don't own. So you take a loan to buy that house. In a loan against property, you already own a house and you mortgage it and then you get the money and you can do anything with that money. So the use of proceeds is different.
Okay, okay. So mortgage includes both purchase of new house as well as loan against property.
Yes.
Got it. Okay. How much of your business is in which bucket? Like new houses
See,
versus loan against property?
See, loan against property is generally for business owners who needs big ticket loans. So we actually wanted to solve the problem of affordable housing. So we focus more on home loans. So 85 to 90% of our business is home loans. And that's why we named the company Basic Home Loan. We wanted to focus on home loans only. LAP is something you exist in market, so customer will come. And as a new company, as a broker, I can also no to the customer. And if it is revenue generating. So we do it, but you know, uh, we consciously don't go out in market to find those customers.
Got it. Okay. You said that products don't exist for some type of customer base. Give me some examples. Like, what are those blind spots where customers are unable to get loans, even though they might
Okay.
be good credit risk, but they are unable to get loans?
So it generally exists on the property profile. Like in India, not every property is registered. In fact, people avoid registries. So there are general power of attorney kind of agreements, leasing for next 100 years, or maybe a Gram Panchayat property or Lal Dora property in around Maharashtra and those regions. And then I think you're based out of Bangalore. So in Bangalore, you have Khata A, Khata B, Khata C, Khata D, so many Khata of properties. So not all are officially registered with the agreements are registered with the government. So a good lender will not want to lend on a property where it becomes difficult to repossess. So like a GTA, general power of attorney property, generally lenders don't want to lend. Or in Bangalore, as I mentioned, Khata B property, generally people don't do. Now they have eventually started, but these are the properties which people don't do. Recently, we had a case where a dentist was looking for a home loan. He was buying a GPA property. He got a loan at 17%. Think of a dentist, he's the most cash rich person. Means even if he start a job anywhere, he'll get the customers. He's getting a loan at 17%. So if I go to that guy and tell him that, okay, I can give it to you at 12-13%, I can acquire that customer very easily. So these are
But
some of the
why are you comfortable with these kind of not clean registration properties?
no, these are not clean answers that we are also putting at checks and balances. So what happens is that these properties are done, but done with more risk. So small HFCs or you can say those HFCs who can take more risk, they lend on those properties, but at a very high rate, 18, 19, 20%, because they build it in their NPS. That okay, for a normal HFC, the NPS is 1%. We assume we will get around 4%. So let's build it there. So they do it, but the cost to income is high. So their eventual lending rate is very high. So we believe that if we can reduce that cost to income to a good percentage, and then even if they put the same kind of risk as in coverage over there, they'll be able to lend better. So that's the thing. And again, when you do a small ticket loan, then eventually it's the profile of customer which matters. It's you can think of a 10 lakh rupee loan as a mortgage loan also, but as a personal loan also, which is additional security of a property. Okay, so it's not. So that's why we're starting with affordable housing loans. I'm not doing a 1 crore, 2 crore rupee house which is done on GPA. I'm doing it in small ticket loans where you can think of the loans like a personal loan or business loan, which has additional security of a property. And that property, again, you have done your checks and balances and you put their risk coverage in your LPAs. That's what we are doing.
Okay, okay, very interesting. Okay, you mentioned a number of times about the cost to income ratio for lenders. Just help me understand this income is the spread here, right? Like your
Yes.
cost of funds is 10%, you're
Cost
lending
is
at 7. 17%. So that's 7%. That is your income. Like what is cost to
Yeah.
income ratio?
So income is the normal income you get after paying your, the net interest margin into the loan which you have. So it's the
Mm,
income you're earning. And costs are the operational cost, not
mm.
the provisioning cost and not the cost related to lending, but your general, cost of operations. For a bank, it would be the branch cost, it will human cost, SG&A, those kind of costs.
Okay. And what's a good ratio to have?
Good ratio is there is no definition, but yeah, generally if you see banks which are good, managed in a good way, they generally have it around 30-40%.
Okay. But does this mean that they are earning a margin of 70% on home loans? Is that the right way to understand this? If your
No, no.
cost to income.
So if they are earning a margin of whatever margin they are earning, in that margin, this SG&A is 30-40%, then they will have their NPA provisioning cost, then they will have their other tax and other costs also there. So eventually they will land at a EBITDA of 10, 15, 20%.
Okay, okay, okay. Got it. See it. Got it. Okay, okay. Okay. So coming back to the way in which you are building this up, you said that there are four channels through which you acquire customers: online influencers, which is like the chartered accountants or neighborhood aunties, and real estate developers who, when they sell a property, then automatically your services are kind of upsold. And then you said alliances. What is alliances here?
So, as you have, offline influencers like the CA, you have digital companies who are influencing customers' decisions. So, property portals or people who are advising customers on their financial management. We tie up with them that if you get any kind of customers whom you are advising, so you can it's a digital form of an influencer. But as a platform, we are tying up with them that you integrate our services with you.
What's an example of this?
Can be, we have not done it yet, but for example, 99 acres.
Okay. Okay. Right, right, right. Yeah, because people would start their research for a house on
See,
platform. So,
we put our product in front of builders and these alliances like this, that if you today start an e-commerce company, you will not start building your own payment gateway. You will just go and tie up with Razorpay.
mm,
Okay, because you will get all the services. Because if tomorrow, say, Government of India launches something new like a UPI, it's not your core to build that into your platform. Your core is to sell your e-commerce products. Similarly, for a builder or for these kind of online players, their core product is to sell houses or maybe something else. So they don't want to tie up with banks. They don't want to integrate with banks. They don't want to create technology around mortgages. So we are like a mortgage gateway that their customer checks out on our platform. And instead of taking money from the customer, we provide them mortgages. So that's the
amazing.
right analogy, I'll say.
Amazing, amazing. I love this checkout platform as a idea. This could possibly like do like a 3x, 4x for you, right? In terms of the
Yeah,
opportunity.
it works well for us. Yeah. So for a
Mm,
builder, what we do is we tell the builder integrate us in your CRM, or we will give our app to your sales team. Whenever customer books a property, our API will be called, and you can send me that data, and customer will get a message that a basic representative will call you to help you in your mortgage. So you get a seamless experience for that customer that he applied and immediately he's been asked for mortgage. Obviously, when he's asked for a mortgage, so someone calls him. So that becomes a good experience for the customer.
mm. Right, right, right. Okay, amazing, amazing. Okay. Um, so this from 1,000 crore of so you're currently able to serve 20% of your demand. What's
Yeah.
an ideal percentage that you want to serve?
I believe that out of these 5,000 crores, we can very easily disburse close to 2,000 or 2,500 crores because those 1,500 crores of more customers, they are good customers. It's not only that I don't have product, there are other inefficiencies also in our system. We are also building a company. So sometimes what happens is I don't have geographical coverage over there. We are in 30 cities as of now. So I am present, say, in Chandigarh. So I can cover Zirakpur, I can cover Mohali. But if I get currently a customer in Ludhiana, I'll have to leave that customer. So if we are expanding our cities also, by the end of this year, our target is to reach 75 cities. So then we will able to cater to those customers also. So those are some things which we are building, and it will take some time that we will reach that thing. But yeah, one thing is good that the product which we have built, through which we qualify the customer to the right bank, we have built it on the credit policies of the bank. So when we started, we thought that we are no one to tell bank that this is the right customer for you. So rather, that's their job. So rather take their credit policy, digitize it. So we actually create a credit assessment memo and then compare it across the bank and then show the recommendations. Now this system works very well for us. If a customer has applied on my platform, so from login state to sanction state, our ratio is more than 75%. We give this guarantee to our customers that if in two applications we are not able to get you a home loan, we'll pay your first EMI if you get it from somewhere else.
Wow.
That's what. So we are probably one of the few or the only fintech company in India which gives guarantee of their job. No other platform will give you this guarantee.
Right. And this guarantee you would give only to people whom you qualify, right? You would not give
Yeah.
this to
So
everybody who applies.
yeah, so when a customer comes, my agent or my platform shows them offer. So I tell them if there is no offer, I cannot do anything. But if
Yeah.
there is an offer, then I will try first with a bank. If it is not done, then as my ratio is 75%, I try again with the second bank. And then it should definitely be done.
Mm.
Because
Okay.
customer has to pay a login fee to the bank when they apply. So I don't want to waste their money.
Okay. Login fees. Huh? Oh, okay. I was
So
not
when
aware of this.
when you apply to a bank for a loan, bank asks you for some upfront payment, which is generally called login fee or IMD, initial money deposit, something or processing fee. There are different names to it. But see, bank is not like a startup that they will give goodies to their customers. They will take money for each and everything they are doing. So if a person is actually evaluating your application, even if it is rejected, there is a time spent on it. So bank needs that money.
Right. Okay, I understand. Yeah. For their operational cost of
Yeah.
doing the credit evaluation and all of that.
Yes. Now
Yeah.
here again, I like to stop you. See, this thing in our FNDG model will be done free of cost. Why? Because I will be doing it through technology. I'll be
Mm.
qualifying using my rule engine which I have built. We call it product eligibility matrix or PEM internally. So I will not be using a human being over there. So that's the benefit to the end customer that you can check your eligibility with me free of cost rather than paying me something first. So obviously, even if they apply to any other HFC or bank in the market, they can check it for free. So I'll get the customer.
Right. Because even in your FNDG, it's vir- it's virtually your book. Like not actually, but virtually it's like your book only.
Yes.
Yeah.
Yes.
Okay. Interesting. Okay. One way to increase this like coverage of those additional 1,500 crores that you're currently letting go is FLDG. What else are you want to also be a lender, build your own book, like become an
Right.
HFC yourself?
So that's the end goal. We want to become a bank eventually. We have big goals. In next 10 years, we'll be one of the biggest banks in India, hopefully.
Wow.
So we started as a broker because on day one, if I go to a bank and tell him that okay, give me some money, I want to lend, or any other investor that give me some money, I want to lend, who will trust me? No one. So what we did, we started with distribution as a broker, and that was our step one. And there we have now getting 5,000 crores of customers every month. So now when I went go to bank and tell them that okay, give me book. They don't ask me whether you have question, business or not. I have business. Now they ask me what is your credit capabilities. So now I am learning credit with FLDs. Post which I'll enter into co-lending and then eventually HFC and then eventually we'll do multiple other products. So it's simple that either you have a big father or you have to prove yourself. We are proving ourselves. So these are and again it helps us also because see lending or credit business is a double-edged sword. As in, if it don't work out, then it will cut you also. So we are also learning along the way. In brokerage, I have zero risk. In FLDG, I have risk of the deposit. In co-lending, my risk will slightly increase. And eventually, I will become a HFC and we'll learn along the way. So that's also good for us. And again, we have to make a business in 10 years, a good business. Not कि 2 साल पे बना के we have to sell it to someone. We are building it for a long term.
How do you build a housing finance company? Which is essentially your roadmap. So just tell me about that process.
See, idea is that currently we are doing FITG, then we'll take a license to do co-lending. And in co-lending, we'll further learn more about credit and various other risk functions. and then eventually we'll take the complete rest on our own book. But in a co-lending setup, again, you can have some book of your own as you have the license. The license generally costs around 20 crores because you need to show a stat capital of that to NHB or RBI, National Housing Board or RBI. So you have to do that. And again, when we started, we didn't have that much money. So eventually, the problem was we were not able to get a license. Now we have raised some money to do the FNTC, and once this FNTC POC, which we are building, is successful, then we can go and market and show that we have a profitable brokerage. We have built our lending capabilities. We need money because we have created an engine. We just need sure to grow it further. So then we'll take some more money and take our own license. And regarding capital, see, capital is easily available. It's not that difficult because at the end of the day, even if I do loans at 14-15%, these are secured by mortgages. So it's a kind of secured returns I'm giving to investors. So it's better than FD. It's better than government bonds. So people will be trusted to lend money. And what I've seen that in market, you can leverage the capital you have and you can raise more money or you can issue bond papers. So, for a housing finance business, capital is not difficult to get. The more difficult thing is to get the right customers,
Mm. Right,
which,
right, right.
by the way, we have solved already. We
Mm.
have a platform where customer is coming. We need capital to give it to them.
Mm. Okay, okay, okay. And I guess generally they say like 1:4, 1:5 kind of a ratio, like your equity to debt for a lending business is what is acceptable, ideal rather.
Yeah. So currently, if you see, we don't have any debt. We are doing FNDG.
Mm.
So there we are putting some equity. So if you see in a different way that I have put my equity of 5% in the FLDG, so our equity to debt ratio would be close to 20x,
Yeah,
1 is
yeah, yeah.
to 20. But yeah, so uh, we're doing it with, I think that this equity to debt ratio will be uh, more visible once we start our own lending through our own book.
Mm.
But in
Mm.
a FLDG model, that's not required.
Yeah, yeah, got it. Okay, okay. Uh, so you said that you are profitable. Are you EBITDA positive, or define what that means when you say you are profitable?
So we have, different levels of profitability which we monitored since beginning. We have CM1, which is post the payment we make to our agents, then CM2, the post the payment of our salaries, and CM3 after a marketing cost, and then the EBITDA post our fixed cost. Since the beginning, we were always CM3 positive. We never, on a unit economics basis, we never burnt money. We didn't do business where we were, burning money. Now, last year, with our scale, we are able to cover our fixed costs also, and since March onwards, we have become a EBITDA positive.
Amazing, amazing. And this is purely because of the fact that you are in a asset light model. You don't have any
Yes,
rent costs. You don't have any salary costs for the field
agents.
executives,
Yeah, yeah,
the agents.
and
Okay.
and obviously technology, because a lot of things which people do manually in a housing finance company, we are doing it through technology.
Mm, mm,
See,
okay.
they
Okay.
see the idea is that for a HFC also, it's not like they cannot become they cannot introduce technology. The idea is that it's such a lucrative market. It's not a push market, it's a pull market. The customer comes to you for a home loan and you're charging a higher rate of interest, they're okay paying it. Within here, people are getting a business loan at around 35-40%. So in 19%, we chalta hai logo ko. They are okay with that. Uh, and so people don't put efforts. If you see these small housing finance companies, I don't want to name them, some of them we work with. So if you go to their website, they don't even have a CTO, they have a chief IT officer. So, their orientation is not like that, that they want to build technology, but they're getting customers. So if they want to expand business, they'll start to more branches, no worries. But eventually, for the betterment of the customer, or you can say, since it's such a big opportunity, some player like us or other would come in the market, will digitize it, and will take it away from them. The same thing which happened in the, I'll say, in the taxi industry, what Ola and Uber has done. They made a asset light model, and the incumbent player at that time, was charging so much. Their rates went down. So it's the same kind of thesis here.
Yeah, yeah, yeah. One man's margin is another man's opportunity.
Yeah.
Okay, amazing. Help me understand this industry as a whole. So, like you are doing about 12,000 crores or 15,000 crores of dispersal this year. How would that compare with other companies? Who would be bigger than you? Who would be smaller than you? Where would you rank in the industry?
See, when this industry started for home loans or any kind of other loans, people were mostly starting web aggregators. See, web aggregator business is good for, plain vanilla products like credit cards or personal loans, or the products that people need in emergency. Like if you have some medical emergency, you will take a personal loan. You will not care about the rate of interest. You want to plan some trip, you need money. It's a short-term loan. You don't care about ROI. But for a home loan, these web aggregators were not that successful, and the reason is because this is a product where people want to deliberate, they want to talk to others, they want to have the right advice. So a person who has just got married and is planning to buy a house, uh, he will not just take any home loan. He can wait for a year, he can wait for the right home to come in front of him, and 15 साल उसकी marriage रह जा रहे, but home loan रहेगा. Even if he get divorced, he'll have to pay the EMI.
Yeah. Okay.
That's a fact. So, तो आप समझ रहे हैं, that guy has to think about it, and that decision cannot be taken through a web portal. You need a person sitting with you. That's why this industry was dominated a lot by DSAs. Now, the problem with DSA is that they are fly by night kind of operators. They don't care about what the right deal for the customer. They care about their margins. So, on every small stage, they will go to the customers and give me 1,000 rupees more. So I have to get this property paper, stamp paper. Give me 2,000 more. I want to procure this or that. Or, for a small customer, like a customer who is taking a loan for 10 lakhs or 20 lakh rupees, they will charge their loan processing fee. Try it out. Go to Just then, find an DSA, tell him you need a loan of 10 lakh rupees. He'll say, I'll charge my 3% upfront. Then I'll help you in the loan. We have a real case. In Jaipur, we disbursed a loan for 15 lakh rupees. Now the customer come back to my team and say, sir, ये क्या कर दिया आपने? You are like, you asked for 15 lakhs, you got to 15 lakhs. No, sir, इसमें से 2 lakh तो आप ले लोगे. So we're like, what are you saying? So customer also expect that people will take money from them.
Right.
So this DSA industry was, I'll say, it was not regulated. See, unfortunately in India, if you see, if a person has to do insurance, or become an insurance agent, they have to tie up with or have to register with the IRDA. For mutual funds, MFE exists. But loans, there is no regulatory body. So any DSA can charge anything, they can missell, they can do anything. So that thing, I believe, and again, that was again, the industry was dominated by DSAs. What we are trying to do is, we were trying to give customers to the same DSAs, but we are asking them to follow steps according to our app. We tell our customers upfront through our app, through notification, if anyone is charging you money, let us know. We'll give you one EMI free. So those kind of things we have done that so the customer is benefited. So in a way, we are organizing the DSA industry also by gamifying their experience to our app. No, same, if I again compare it with Ola or Uber, if I take 12 years back from here, what was the problem of the taxi man? A taxi driver will roam here and there to find the customer. If he gets the customer, he needs a longer ride. Lamba vada chahiye. He will not go with the meter. Okay, and he will not give a good experience to customer. Same is the problem with DSA market. The agent needs a big ticket to the customer. They will charge unnecessary cost to the customer, and experience is totally bad. Ola and Uber never created any new taxis. For the same taxi drivers, they created a new experience for the customers. That's what we are doing. We are just organizing this industry. Can we called as a pseudo regulator for these DSS, because and we can do that because we are not aggregating their customers. We are providing them customer. We are providing them new business. So that is the reason they listen to us. They follow the steps in the app. They do it in a proper way.
Okay. Yeah, I'm guessing that at 12, 15,000 crore dispersal, you would already be the biggest DSA in the country, or are there other
No, we are
DSA?
not.
Yeah,
No,
other
there are traditional business houses. They have been established in India from past 30, 35 years. They are doing close to, I guess, 2,000 crores a month. So that's why I said that when we
as a
cross
DSA,
2,000 crores, yes,
2,000
as a
crores as a
DSA.
DSA. And so,
Yes.
would I have heard these names? Any names?
See, that's the I don't want to name here, but
Okay.
yeah, see, that's the irony. That's the drawback in their business model. They are doing so much, but you won't have heard their name. Why? Because they are not originating their customers. They are asking small DSAs to aggregate. And now these small DSs don't allow them to even talk to their customer because they are afraid that these customers will be taken away from them. So, today these fintech companies, even though they are burning money, they are creating a brand image, brand name. In financial services industry, brand is everything because you're dealing with money, you're dealing with people's money, you're dealing with banks' money. So if you don't have a good name, the growth will be hampered. So, but these aggregators or traditional DSA models, they don't their customers don't even know. Which you must okay. Let me just ask one question. Daily basis, I'm very sure you would be getting calls. Sir, आपको credit card चाहिए, personal loan चाहिए.
Yeah, they
You
only use
must
the
be
name of the bank, like HDFC card,
uh,
SBI card.
so they no, no, they will say I'm calling on behalf of HDFC.
Hmm.
They will not say I'm not from. So that on behalf is actually a DSA.
Right. Okay. Got it.
He cannot links from the HDFC or any other bank. So that's what they do. They are not able to tell their name to the customer. So this is the problem on the branding side which we are solving through our app, through our interaction with customer. We tell them that okay, we are helping you in your home loan. You sit at home, my agent will do everything. So that's again a differentiation which we are creating.
Okay. Okay. Got it. Amazing. How big is your team today?
So we are now around 450 members in our team. In that, we have around 250 people in sales. These guys are spread across 30 cities. Their job is to, acquire these agents or DSs to whom we give our leads. And these, then they train them, then they help them on a daily basis for any kind of issues or problems they solve. Facing.
And the others? So 250 out of 400 are sales, and the remaining
Yeah,
150.
remaining are in primarily you can say in technology. In we have a small call center also because when we get the customer on our platform, a courtesy call goes and we try to understand their problem and then accordingly we assign them the agent that who is, will work on your application. So we have around 50, 60 people in call center and then people are around 20 odd people in technology and then we're in other various functions.
And I'm guessing that you would not need to increase this team size too much, even when you are at say 2,000 crores monthly dispersal. Even at that stage, you
We
don't
will,
need
we
to.
will have to increase it, but not that much. See, whenever we start a city,
Mm.
we need to have a city manager and two, three people under them. And that because, not because the operation demand it. That is only because, the agent want to have a face. Because, in India, counterparty risk is high. So if I give an application to a customer to fulfill, or sorry, a agent to fulfill, he will not do it until unless he's sure that he'll get his money. So he needs some kind of presence. And eventually we can go away with those things.
Okay. Okay. What happens when you open a city? Like say you go to small city, like say Amritsar. What would you do there?
So first thing is we hire a city manager and two, three people under them. Then we liaise with banks so that we get permission to do business in their branches over there. And then obviously the first thing is to acquire agents and customers. So then these people under that city manager, their job is to go to market, acquire these agents and tell them that how to do the business with us. And then we impanel these agents and we start giving leads to them.
Uh, what about like some sort of a asset check that whether this Amritsar has good quality assets? What should be the right property value for that? Like, how do you do that when you go to a new city? Like, how do you learn about property prices and quality of assets in that city?
Okay. So for that, the data is available on RBI website. The RBI publish the statistics that how different cities are performing. We take that data and then we go to RERA website. If you go to RERA, you get the new projects to be launched in each city list. That what upcoming projects are coming. So you get to know what will be the demand in that city. So from there, we have made a list of top 100 cities in India where we want to expand first. So first we went to first 30 cities, and then again in some cities it becomes easier for us to expand. Like we follow a benchmark model. So we have three hubs in India currently: Delhi, Mumbai, and Bangalore, and we expand readily as a spot over there. So if I'm in Bangalore, it's easier for me to expand to Mysore. It's easier for me to expand to Bangalore. Now we started Chennai 2 3 months back. So from Chennai we are expanding to other Tamil Nadu cities. We are expanding to Kochi. even though some of these cities are not in the top 100 or top rankings, but it's easier to expand because my team is over there. So it's a mix of strategy that we deploy. And again, as I told you, it's a very regional industry. So I sit in north, so I might not be too good in the south operations. So we have our business head in south, who's sitting in Bangalore. So he makes a strategy. I just have to back him for that.
Okay. My last question to you: what have been your learnings while building Basic?
See, the biggest learning I had is that while I was working in other companies for 5 years, I always wanted to start something. In fact, in 2012, I started something after leaving my job, which was on the lines of Urban Clap, but I was not able to make it successful. It was 2 years before Urban Clap. So I was very afraid that if I start something, now I'm married also, how will I, solve all the problem? How will I get the money? So now the biggest learning is that if you have a good idea, there is a lot of capital available in India. Even if you don't get capital, start with good people because you don't have to solve all the problems. You have to solve the first few problems. Then you will get good people to solve very many problems. So make a good team. So that's something which now, touch wood, if it don't work out, suppose something bad happens, I might not even try to go for a new job. I try to build something again because I've learned that, problem looks like a big problem, but you have to break it down into parts. You solve the first few parts, and then other people will solve it for you. Then, importance of teamwork. See, I started working as a investment banker, and even though you have teams in investment banking, but it's more like a individual contribution kind of job. So, but when you are managing a sales team of 400 people, not 250 people and other team members, and then you have 8,000 agents, so it becomes very crucial that how you communicate. So, in the beginning, when I started in this industry in 2015, 16, I got a lot of backlash because I said something, it propagated something else to a person who's at a relationship level, a relationship manager level, and he thought about it in a different way. So you become more experienced in how to handle, how to manage expectations, how to talk to people. That's something good. And obviously, the third thing which I have learned, and more than my investment banking job at that time, also I was raising money for other companies, but now I'm raising it for my company. So I've learned how to present your business better, how to, you know, explain it in a simple form. Like I was giving a lot of examples in our talk also, the taxi driver, those things. So I've learned it along the way that, it's not always to go into nitty-gritty. It's better to tell it like a story or some examples. So I think I've learned a lot along this journey.